a very special appearance with some guidelines. He's the 120th Governor of the Bank of England. Mark Carney joins us now, and he, of course, joins us within a strict quiet period as he has a small meeting on Thursday, which we will not discuss. Those are, of course, with any major central banker, the appropriate rules, and we speak this morning on climate change. Governor Carney, when we look at climate change, I think the obvious question is, why is a central bank governor involved? With the FSB, the Financial Stability Board, why have you taken an interest in Paris?
Morning, Tom. Two reasons why I'm involved. First, as a central bank governor, the Bank of England is actually the regulator of the insurance industry in the UK. It's the fourth largest insurance industry in the world. And one of the biggest reinsurance markets with Lloyd's of London. And if you regulate that market, you know that on both the liability and asset side of an insurance company, particularly in property and casualty and reinsurance, they manage climate risk. And these are the most sophisticated managers of climate risk. The second reason, though, as you said, I chair the Financial Stability Board, and we've been asked by G20 leaders, what should regulation do about climate change? And our answer was, well, actually not regulation. This is about making sure the market works as well as possible. And for the market to work, it needs information. So we're not making a judgment on climate change. We're not advocating certain strategies, but we want the market to be in a position where they can express a view, positive, negative, on risks and, very importantly, opportunities around climate change. And that's what Mike Bloomberg and the private sector's work has done. They've delivered the guidelines for financial disclosure around these risks.
Your institution, the Bank of England, goes back to 1694. I believe the air pollution in London, through Charles Dickens' readings and others, has been horrific. And we always somehow improve it with economic incentives. What are the economic incentives of private enterprise, and particularly of multinational corporations, to actually get the job done? What's the actual incentive to do good?
Yeah, well, I'd say there are two incentives here, Tom, two classes of incentives. The first are a series of policies that have been put in place. In some countries, it's a carbon tax. In some countries, it's regulation. In other places, it's a combination of those two, which change the opportunity set for companies and the risks that they have to manage. But the second set of incentives are around how does a company manage risk, and how does it manage opportunity for creating long-term value? And I think the thing that's interesting today is that climate is coming into the mainstream in those conversations. So let me give you a couple of facts as of today. You have eight of the 10 largest asset managers in the world signed up to support these recommendations. You have 20 of the globally systemic banks. You have the world's leading sovereign wealth funds, all the major insurers, and many of the major pension funds. In total, more than $50 trillion of assets under management, and more than $80 trillion of financial sector balance sheet that are looking for this type of disclosure. We saw overnight just one example with Exxon Mobil's announcement on enhanced disclosure, and you're seeing it across the board. The capital chain is looking for this information, including, and I'll add this, the two major shareholder proxy voting services, which are responsible for 90% of that market. They're looking for this information, and now they have a framework to get it. And it tells the providers of capital who's thinking about risk, who's looking at opportunity, and who's managing it well.
It would be inappropriate for you to make direct comments on the Trump administration and what we've observed in America on climate change, the polarity of the debate within the United States. But I want to go back to your thesis at Oxford, the dynamic advantage of competition. Speak to the doubters about the dynamic advantage of climate change action. How do we get the needle to migrate over to a better understanding of urgency?
Well, two things. One, there are two tutors at Oxford, my mother and now you, Tom, who've read that thesis. I'm very impressed. So let's go to the dynamics here. The question is, who sees risk, who sees opportunity, and who is managing appropriately against those? And investors are looking, and banks, and you go from HSBC to JP Morgan to others, they're looking for which companies not just disclose their carbon footprint, but have the governance processes and the strategies to address, again, risks, but really seize opportunities. And let me get to the point about opportunity. The scale of investment required, and the scale of investment we're seeing, are trillions of dollars per annum for decades to come. Now, I can take, and I think this point I want to stress is what the Bloomberg recommendations, the task force recommendations do, is they provide information for the market, for a market. And you can be on either side of a market. You can think that governments, whether it's in Europe, U.S., and Asia, could take longer to put in place policies. You could be a bigger believer that there's going to be huge technological change, or there could be a skeptic about that. You could just think the science is off, or it's too negative. For all of those views, and a market is an expression of a myriad of views, as you know, for all of those views, you need information in order to express them. What this is doing is satisfying what is now the mainstream demand. Again, 8 of 10 of the top asset managers in the world, all the major globally systemic banks, they want this information in order to take a view. They won't all have the same view about the time scale, the urgency, but that's okay, because that's a market functioning as a market should.
You mentioned the ExxonMobil announcement, their initiative here on climate change. What are the incentives for big oil to speak to Mark Carney about climate change?
Well, I think, and we do speak to big energy companies, the large extractors. They're all in. In fact, the first disclosure under these guidelines is BHP Billiton. That's the first example. Shell is an integral part of these, developing these, as is the Italian oil company, etc. And the reason they look at this is they know that we're on whatever the scenario is, and people have different scenarios, is there's a transition from certain types of fossil fuels to cleaner fossil fuels, ultimately renewables and others. And there's a lot of value along the way. There's risk to be managed, but there is a lot of value along the way. And it's in their interest to get that information out, to have an intelligent conversation with debt and equity investors, with banks, about where are we in the transition, who's well prepared, who's ramping up alternatives. Well, they are harvesting some of those fossil fuels that we need for our economy today. So that's part of the reason why those leading companies are part of this already.
Governor, in our elite world, we live on airplanes. I mentioned big oil. Give me the incentives for airlines and the entire transportation industry to figure out jets, jet fuel, airplane pollution, and climate change. That seems to be a niche, but nevertheless symbolic place for this corporate discussion to occur.
Yeah, and again, you look at, so what are the kind of conversations around this that, for example, the Virgin Group is part of this as well. So Virgin Airways, you've flown on, I've flown on, they look at, so what are their fleet? When are they renewing their fleet? Are they moving to more efficient aircraft? How do they manage their entire waste chain as part of, and who are their suppliers? All of those aspects are relevant to this, because in the end, we're in a period of time where the question is, it's not how ultimately efficient you are or how efficient you are today. It's what your plan is to become more efficient as it becomes more and more expensive, costly, whether in terms of a carbon price or in terms of consumer attitudes, because there are consumer attitude shifts that happen as well. What's your plan to improve efficiency, manage these risks better, and again, take the opportunities? And, you do see it, and I won't name specific companies, but in the consumer's goods space, in the electronic space, in the tech space, there are certain companies that are way out in front on this, and they get a benefit from consumer demand as a consequence.